2-3 years ago, we set out our strategy to become a leading food and beverage player across the Middle East and North Africa by 2025. And we're well on the way to achieving that. We talked about inorganic expansion, we talked about expanding geographically, and I think 3 years into that strategy, we've made great progress. So if you look at our business today, we are roughly 4.6 billion dirhams. 3 years ago, we were 2 billion dirhams. We're now operating in 4 verticals versus 2 verticals in 2020. Our contribution of international business is now roughly 50% of our total business versus 10% in 2020. So very much our growth strategy is to accelerate fast. Very much our growth strategy is to invest in capabilities, to grow both inorganically and organically, and to get more efficient in terms of how we run the business. And we're pretty happy that we're achieving on those plans. So originally we were operating in what we called our food and water vertical, then we had our agri vertical. Most of our M&A has been done in protein and in snacking. And those are the businesses that, as we look forward to the future, we expect to see grow fastest. Well, that's not to say our core businesses are still not doing, are not going to grow either. If you actually look at the performance of both our agri and water business last year, both of them grew strongly. So our legacy business is doing super well, but we expect to see even more accelerated growth from our new verticals moving forward. So what we've been quite clear on our portfolio as part of our growth strategy. We want to grow inorganically. We acquired 6 companies over 2 years. That's around 1.8 billion dirhams of acquired revenue. Those businesses are doing very well. We've integrated them very successfully. They allowed us to set up our snacking vertical and our protein vertical. Looking forward, we continue to look at opportunities, inorganic opportunities for further acquisition. But at the same time, with the businesses we've acquired, we have lots and lots of opportunities to grow organically. So innovation, we're investing in digital. We're looking at how we can accelerate cross-selling between our different business units, leverage expertise in different sales channels. So there's lots of opportunities we have. We keep saying the most important thing we have to do is choose where to spend our time and distort our resources. So last year we announced that we were creating Agthia Ventures, our corporate venture capital arm. That's a 200 million dirham fund that we've set up that's been managed as a corporate venture capital entity by Touchdown Ventures. We have resource within the team who work directly with them on evaluating opportunities, both in North America, in Europe, but also here in the GCC. So that's a very exciting part of our portfolio. We're spending time looking at new tech, we're spending time looking at new innovations in that space, even things that can help us create a more efficient supply chain. So absolutely, we're looking at those kind of startups, the entrepreneurial energy that's out there, and seeing how we can benefit them, but also how they can benefit our core business. So at the moment, what we've done in the M&A space, so we created the fund for corporate venture capital that sits separately outside of Agthia. In terms of what Agthia is looking to do, then most of our acquisitions have been financed through a combination of cash and debt. We have done some share transactions. I think primarily our focus is to continue to look at those kind of financing mechanisms. If the business continues to grow, then of course we'll look at other opportunities for the future. So when we talk about how would we invest in potential M&A, our first priority would be to leverage our balance sheet, to look at debt. Obviously the interest environment is still relatively high, but still relatively speaking, the cost of debt is still cheaper than the cost of equity. So if we needed to go bigger, if there was opportunities of a grander scale, for example, then potentially we'd look at a share raise or any other option to raise the appropriate capital. I think there's 2 parts to this. Firstly, in the Middle East, the alternative protein market is still relatively small compared to the core protein market. I think globally it's obviously been an area of great excitement. I think probably it got a little bit over-invested in that sense. So what you're now seeing is a reconsolidation or a readjustment back to what the market and what the consumer is ready to spend. I think what you're seeing in terms of consumer trends at the moment, consumers are very conscious about health benefits, about what they're consuming. They're looking at companies and saying, do their values fit with our own values? So there's a lot going on in that space. Alternative protein, I think, is still something for the future. It's just a question of when and how fast. Look, I think that what AI can help is right across the food business. I think, look, we're investing a lot in digital, and that investment in digital is really about how do we get more consumer-centric? How do we actually get more data and interpret that data to understand what consumers want? I think the biggest thing for me on the digital side of the business is that consumer centricity and really connecting more quickly with consumers and predicting trends. AI can help with demand sensing. AI can help with a lot in terms of defining what consumer trends could be. So I think the industry is going through a bit of a transformational phase at the moment, but it's very interesting to see shifts in consumer behaviors just in terms of what they're looking for. I don't think so. I think where you've got to, the way we look at AI is how can it benefit what we're doing. I mean, honestly, we see Agthia as a growth company. If you look, our workforce and our number of colleagues has gone from 4,000 to 12,000. There's a lot of things in our business that are repetitive, time consuming, and don't help us grow faster. So I think anything that helps us to be more efficient is well received. But I think the companies that are going to grow for the future are the companies who really understand consumers and adapt to those consumers. And I personally believe, the role of people in the organization is going to continue to be extremely important. And by the way, if you look at the investment that Agthia has made in people and organizational capabilities, it's significant, and it's something we're still committed to. I think if you look at the overall GCC outlook's pretty positive at the moment. UAE economy is very strong. Saudi with their 2030 vision and their execution also very strong. And look, strong UAE, strong Saudi generally means strong GCC. So I think the outlook for the GCC is extremely positive. As a food and beverage company, our stated strategy is to grow in markets. We have to supply people. I mean, it's fundamental to food and beverage companies. Egypt continues to be important. We acquired 2 very good businesses there. Yes, it's going through some economic challenges, but you look at the performance of Agthia's financials, you can see that we're able to continue to grow those businesses and profitably in challenging markets. Egypt for us is how do we build this as an export hub for exporting into Europe, for exporting into North America, and also across the GCC. So generally my outlook for the region is positive. But as with anything, this is the market we operate. The last 3 or 4 years have taught us that volatility is more extreme than ever. So we need to be conscious of the risks and making sure that we plan for them. Biggest market's UAE, so 50% of our revenue comes from the UAE. UAE economy is doing well, but bear in mind that 3 years ago, 90% of our revenue was from the UAE. I think in terms of growth, Egypt I expect to grow. I mean, obviously the economy is still a little bit volatile, so we'll have to monitor that. But if we talk about core growth, Saudi will continue to be strong, UAE will continue to be strong, and we see our export business accelerating. We sell to over 45 countries now, and direct into the US, direct into Europe. We're selling through distributors in Asia. Our Indian business is growing very rapidly. So I keep saying to the business is what we need to focus on is where our biggest opportunities for growth are, and we double down in those locations. I think the Red Sea challenges have lengthened our supply chain to an extent. So what we've done is adjusted quite quickly to be able to make sure we've got the appropriate coverage in the pipeline. COVID taught us many things, one of which was the importance of having flexible sourcing. So we're able to switch supply depending on which market and how quickly we need to get it there. But yes, definitely the Red Sea disruption has extended lead times. It's added a bit of cost to the business, but I think overall we've been able to navigate that relatively successfully. Look, I think F&B overall, I always say it's a great industry to be in, because at the end of the day, as long as there's people to feed, there's mouths to feed, we're always going to be relatively recession-proof. If we talk about the Red Sea, if we talk about general volatility, it's been there for 3 or 4 years. You know, whether it was the Russia-Ukraine crisis, whether it was the COVID situation, the supply chain's been stretched in many, many different directions. I think broadly speaking, demand will continue to be there. I think the companies that will succeed are the companies that are able to navigate that volatility the best, and I think Agthia has proven its ability to do that over the last few years. I think the outlook for food and beverage in the Middle East is on this region is pretty strong. Economies are doing well. I think as we look to 2024, you know, we're not quite ready to give the market guidance on where we expect to see Agthia numbers. That will come in the next month or two. But generally our outlook is positive. We had a great 2023, as you've seen by our provisional results. We'll bring more detail to the market as soon as those results are formalised. But yeah, I think the outlook is positive, but we need to navigate that volatility. I think that's the challenge. Look, sustainability continues to be a very hot topic. Obviously, the COP summit last year, where we saw some huge breakthroughs in terms of the outlook. I see it as positive. I mean, the motto of Agthia is for the better. You know, a lot of the stuff, we were already very active in the sustainability space. We launched our rPET bottle last year. We launched our plant-based bottle a couple of years ago. We're looking at how we provide broader water solutions that fit in with the environment. So we're focused on solar power. We're focused on reducing our waste. So I think, look, this is going to be a continuing trend across the Middle East, and again, the companies who embrace it early and move with the agenda, I think will be the companies that are geared up for success in the future, and we are doing that. So we're very confident in that regard.